Hello everyone, I'm Malith Hewage, Chief Financial Officer of LB Finance PLC. It's a pleasure to present you our annual report for the 2024-25 financial year, highlighting our key achievements and financial performance for the year. In LB Finance, we are all about driving growth, staying innovative in the financial services space. In this presentation, I'll take you through some of the key highlights and financial milestones that made 2024-2025 a successful year for us. If you look at the top line, our net interest income grew by 3% year-on-year, reaching Rs 25 billion. This growth was mainly driven by increased business activities, especially in vehicle financing and gold-backed lending. Even with the repricing of our lending and funding portfolios at low interest rates, we managed to sustain our healthy interest margins, which positively contributed to overall profitability for the year. Moving on to non-interest income, we recorded a strong year-on-year growth of 40% compared to the previous year. A major part of this growth came from credit-related fees and commissions due to expansion in our business activities. In addition, growth in our gold loan volumes led to higher gold loan service charges, further driving the growth in our non-interest income. We recorded a reversal in impairment charge amounting to Rs 256 million in 2025 compared to the charge of Rs 373 million previous year. This reflects our steady improvement in asset quality levels. This positive trend was mainly driven by a strong lending portfolio mix, improved credit underwriting practices, and the gradual improvement in overall economic condition. Our operating expenses increased by 13% year-on-year, mainly due to higher personnel and administrative expenses. This growth was driven by salary revisions, performance-based incentives, and increased operational activity. As a result, our cost-to-income ratio stood at 32.5% against 31.1% previous year, remaining among the most efficient in the industry. This reflects our continued focus on operational efficiency. We are pleased to report a strong profit growth of 13% for the year. Our operating profit before tax on financial services increased by 9%, reaching Rs 20 billion. Net profit for the year rose to Rs 10.8 billion, up from Rs 9.5 billion previous year. This solid financial performance was supported by a gradually improving economic environment and the continued effectiveness of our operational strategies. Moving on to financial position, our total assets recorded a 19% growth, reaching Rs 240 billion. Our interest-earning assets comprising loans and receivables, investments, and other financial assets accounted for more than 93% of our total asset base. On the liability side, we recorded a strong growth of 20%, largely driven by the growth in our customer deposits and bank borrowings. Our cash and cash equivalents increased by 23%, reaching Rs 7.8 billion at the end of the financial year. Operating activities recorded a cash outflow as we funded our lending growth partly through customer deposits and the balance through bank loans, which are reflected in financing activities. Investing activities included a capital investment of Rs 1.2 billion for the year, while financing activities recorded an inflow of Rs 11.4 billion, driven by increased bank borrowings. Our lending portfolio increased by 23% year-on-year, reaching Rs 197 billion, mainly due to a 15% rise in gold loans and a 27% increase in vehicle financing. We remain focused on maintaining a diversified lending base with a strong growth in all key sectors, including agriculture, manufacturing, and trading. We maintained a well-managed gross NPL ratio of 2.2% and a net NPL ratio of negative 1.2% for the year. This reflects the effectiveness of our overall credit risk management and the strength of our asset quality controls. We delivered strong return ratios with return on equity of 22.7%, and return on assets of 4.8%, reflecting our strong profitability and consistent value creation. In addition to that, we declared a dividend of ₹6.50 per share, in line with our dividend payout ratio of 33%, demonstrating our continuous commitment to distribute value to our shareholders. In conclusion, LB Finance delivered a solid financial performance despite a challenging operating environment. Looking ahead, our strategy focuses on expanding our lending base with appropriate product pricing and optimizing our liquidity levels to continue creating value to our stakeholders. We remain committed to drive the business growth while maintaining strong asset quality levels, prudent credit risk management, and continuous operational excellence. We are very confident in our path ahead, and we look forward to a year of continued success. Thank you.